what we find is the biggest macro influence on crypto is the global money supply. So this is M2 year on year. And this chart shows its correlation to the crypto markets overall. So this is the crypto market cap versus global money supply. And you can see the cycles are the same. Now that makes sense to me. It might coincide with the halving cycle, and that makes a supply issue plus a demand issue. Why a demand issue? Well, because global liquidity is what M2 is. So if there's more liquidity, there's more money that flows into crypto. As liquidity comes out of the system, there's less money. One of the other things that's been weighing on crypto has been inflation. It's a long duration asset, and long duration assets need to worry about the discount rate, and inflation is part of that, plus interest rates. Interest rates have risen, inflation has risen, risk assets get discounted more.
Real Vision CEO and former Goldman Sachs executive Raoul Pal has recently given a much-needed update on the entire cryptocurrency space. In his broadcast, Pal provides a fresh perspective for looking at some of the dynamics of the cryptocurrency market, especially price declines and upward spikes. This is no other than M2, a measure of the global money supply that includes cash, checking deposits, and easily convertible near money, far more accurate than M1, which only measures cash and checking deposits. Pal also speaks extensively about the Purchasing Managers' Index, or PMI, an index of the prevailing direction of economic trends in the manufacturing and service sectors. He explains that the index is one of the most accurate and fastest tools for predicting a period of sharp economic downturn. According to one of Pal's charts, we are quickly coming to that period, but it will be short-lived. Ensure you watch this video to the end, as the Macro Guru has some important updates about the general crypto space and equities markets. We'd also love to hear from our viewers and subscribers, so if you have any criticisms, comments, or observations about the video, do not hesitate to drop them in the comment section below. One little thing before we get right into the video. Please hit the like button and subscribe. Everything helps with the YouTube algorithm, so we can continue to bring you important updates about everything crypto. With that out of the way, let's dive right in.
The macro right now is very important. So I'm thinking that economic growth falls off a cliff. I put out some tweet threads about this. I've talked about it on the daily briefing. I've been talking about it for some time and writing about it in Macro Pro. Now, if I look at this chart, this is an indicator that we've constructed at GMI, which uses the rate of change of interest rates, commodities, and also the dollar. And it gives a financial conditions index. It leads the Goldman Sachs Financial Conditions Index and suggests that we're about to go into a short, sharp recession, and that the ISM, which is my best guide to the business cycle, is going to fall sharply down to something like 35, which is a decent sized recession. Now, this indicator is already picking up, which means that it leads by 9 months. So therefore, in 9 months, we should start to see a sharper turnaround. Now, we can't always tell how this plays out, but that's my best guess, like a 1974 style sharp recession, recovery back up. And I think asset prices bottom well before the economy. 2018, they bottomed pretty much a year before. And in other periods of time, it tends to bottom 6 months or so before. So I'm thinking we're close to the bottoming phase in markets overall. Equities might have another stab lower because I think they're not fully priced in. They're pricing in about, let's say, 45 on the ISM. That's what the S&P is doing. NASDAQ's probably about 40. So that's starting to price in a reasonably severe recession. 47 is about a recession in ISM levels. And if I look at the further end of growth stocks that I call the exponential age stocks, they're pricing in somewhere around 30, so a really severe recession. So the markets are sort of pricing it in. Now, crypto's been picking up. Now, it's interesting because most people don't understand that macro and crypto are so related, because crypto is this network adoption model that I'll come on to in a bit. But really, the big cycles, I'm starting to think, are not driven by the halving cycle so much as the macro cycle. You see, ISM is coming lower. We can see this also for the next one, which is the new orders minus inventories. It's less forward leading, but it shows us maybe in the next month or two that ISM is going to fall pretty sharply. Okay, that's interesting because what we find is the biggest macro influence on crypto is the global money supply. One of the other things that's been weighing on crypto has been inflation. It's a long duration asset, and long duration assets need to worry about the discount rate, and inflation is part of that, plus interest rates. Interest rates have risen, inflation has risen, risk assets get discounted more. So we've got to that, but I I think you can understand by now, I think we're at the big turning point in the economy where inflation starts falling, but growth collapses. That brings down yields. And if it brings down yields, it starts allowing stuff further out in the duration curve, like 10-year bonds, 30-year bonds, technology stocks, and really crypto, because it's the most forward, longest term asset of all, to start outperforming. So I think we're starting to form a base based on the macro.
In his broadcast, Powell further breaks down the sort of interdependent relationship between money supply, ISM, and inflation. He explains that ISM always leads money supply, and it is currently inverted, which means M2 will soon take the same direction. Most importantly, Powell believes any upward movement in the global money supply will greatly benefit the cryptocurrency market and improve prices. Please listen to Raoul Pal's simple explanation.
Now, to bring it back to why the ISM matters, as you can see from the next chart, ISM actually leads money supply. So in this chart, ISM is inverted and the money supply looks like it should start bottoming out and going higher. If it goes higher, crypto should go with it. Now that makes sense because as economic weakness comes, the central banks start coming into play, liquidity starts being pushed into the system. We're already seeing it in China. That's probably picking up the money supply growth already, but I think we'll see it globally. So that becomes interesting. You know, the US dollar situation, maybe we see swap lines, that helps money supply. So I think we're going to see the turn in money supply. So that's the macro for crypto improving as growth goes slower. It's kind of counterintuitive because you think, well, if growth's slow, then crypto is going to be bad. It's the opposite. As growth slows down, bond yields fall, inflation falls, money supply starts increasing, crypto starts doing well. So what this is a gyration within the long-term trend adoption of crypto. So this chart is the chart I always show, which is the log regression chart of Bitcoin. And what you can see is in the log regression chart, it got to roughly two standard deviations oversold, which is actually about the most oversold Bitcoin's ever been versus its trend. So we should be looking at a reversal point because the exponential trend of adoption is not going away. It's not changing. In fact, the adoption in this bear market has been much better than the previous bear markets where we saw a lot of people leave. We've not seen a lot of people leave. We've just seen network activity slow down because there's less money around because of money supply and inflation. So I'm looking for the turn here. The other long-term indicator I use is the 5-year exponential moving average. And this has encapsulated the trend of Bitcoin pretty much since the beginning. And here we are just touching that trend. We broke through it. I think we break back up through it. So again, this is the buy zone. You buy these times and this is where you make the larger returns. The risk reward gets better and better and better the closer to that 2 standard deviations oversold, the closer to this exponential moving average. That's when the really good risk reward. What's the downside? 30%. What's the upside? 10x. So those kind of risk rewards are super rare in almost any asset class, but they are in crypto and we're in that zone now. And I'm getting more and more comfortable with there. If, for example, I look at the RSI for Bitcoin, the RSI for Bitcoin is the most oversold it's ever been. So that would suggest that the markets are massively oversold. So again, the risk reward looks better and better here. It's actually the same for Ethereum. Ethereum, lowest RSI in history. Obviously, everything's starting to pick up as we've had this tremendous rally from the lows, which still looks small on the chart, but it's actually, you know, some of these tokens are up 100%. I mean, ETH was up at the top of this run about 85%. I mean, that's pretty decent, but I think it's just the start. We're in the correction phase right now because we got overbought, but I think the correction doesn't last long before we go to the next leg higher.
This broadcast is certainly one of those Raoul Pal masterpieces that clearly depict his love and knowledge for both the crypto space and the macro environment. While more traditional crypto analysts like Plan B would rather look at the market from a different, more technical approach, Raoul Pal's macro talks are always interesting and thought-provoking. In this broadcast, Pal is essentially saying that Bitcoin's halving cycles do not have much influence on the crypto market. It won't be difficult to name at least 5 other analysts and market experts that will completely condemn Pal's comments on the presumed ineffectiveness of the halving cycles, and his complete bias toward the macro influence Bitcoin gets from the global money supply. But as we always do, we will leave it to our viewers to judge. What do you think about this insightful broadcast from Raoul Pal? Are you in support of his assertion that the halving cycles don't influence Bitcoin and other cryptocurrencies? Why? Please share your thoughts and observations with us below. Also, remember to like this video and subscribe to our channel for more videos like this. Thanks for watching.